I had a very successful event in Singapore. I was there for 10 days. A lot of you showed your affection on me wherever I went, whether it was the streets of Singapore, whether it was at the restaurants, the malls, and more particularly at the events. I wish to thank all of you from the bottom of my heart. My team felt that I had never done a full fledged event in Abu Dhabi, and they wanted me to do so because we have a lot of friends there. So the next event would be in Abu Dhabi on the 5th of October. Those desirous of participating in that event, drop a message at the WhatsApp number given below or send a mail at the email given. My team will get in touch with you.
Hi everyone, welcome back to Be Rich. It's me, Vinod, and I hope you're having a wonderful Tuesday. At least you had a wonderful Tuesday and it's Tuesday evening. So I hope your day was productive and you got something done. For those of you who had a holiday, I hope you had a wonderful holiday. For those of you celebrating the festival, my wishes are with you. So what did I want to talk about today was, what is the Fed? There's a huge expectation that the Fed is going to be cutting the American interest rate. There's a couple of things which to keep in mind when it comes to this. One is the current election cycle, which the US is going through, and of course the federal debt, which is been climbing, and none of the political parties or none of the politicians want to talk about it. None of the channels are really covering it. The American debt, it's gone well past any kind of record which we ever even dreamt of, which is kind of crazy. On that same backdrop, we have the Fed, and the Fed has been contemplating on cutting interest rate, and they said now it's going to come out and cut the interest rate soon or shortly. First, there was an expectation it was going to be a half, then now it's saying it's 0.25, and the market seems to be quite happy with whatever the Fed does or doesn't do, if you look at it in the broader sense. The simple reason is it's entered a tricky position where the Fed usually has reasons to cut the interest rate. The economy is in trouble, there's a recession on the cards, there's some kind of catastrophe happening, so the Fed needs to step in and stabilize the currency and stabilize the markets. So it steps in and cuts interest rates, making sure there's liquidity in the market and everyone has cash to go around because of the emergency. Right now in the American economy, there's no such emergency happening. Inflation seems to have cooled off. Yes, the job numbers are not bad. At the same time, they're not great. They're like, okay, mortgages, if you look at the car loans, credit cards, if you look at it everywhere, the numbers are looking so bad. And there is really no pressure on the Fed to cut these interest rates. So the question is, why should they cut the interest rate when there is no real reason to cut the interest rate? And the fear of a hard landing and saying soft landing was not possible, seems to be very clear that we have managed to do a soft landing and avoid any kind of recession of sorts. So we've been told. Realize something about markets and market analysis, especially when it comes to recession. It is always looking back that we say the recession happened from this time to this time, that we were going through this tough time from this time to this time. At the time when we are going through it, we really can't see it. It's like going through a tunnel. We assume there's light at the end of the tunnel. When that light comes, we don't know. But once the light comes and we're out of the tunnel, then we know how long the tunnel was and how dark the tunnel was. So it's pretty much like that. Looking forward, we have no idea. Even from the current situation where we stand, it's very difficult to say. So with this imminent rate cut coming, the strange behavior of the market is happening in the sense that today in the morning when I opened up and saw the Japanese stock market, it was down almost 2%. Of course, towards the end of the day, they pulled it back up. And the Japanese stock market is something really great to look at in the sense that there's hardly any domestic participation from the Japanese public in the Japanese stock market compared to what the foreigners, movers and shakers do in their market. So if you look at the Japanese stock market, you see a lot more volatility due to foreign investors than their domestic participants. In India, we would have seen the same kind of volatility. When the market opened negatively, then immediately our domestic investors, mutual funds, and everybody else stepped in and they started buying heavily. Though there are specific stocks, if you look at, like your Manappuram, Dr. Reddy, Natco, IDFC, IDFC First Bank, Tata Motors, just to mention a few. We're all trading right as I'm recording this negatively. Some of them are down by 0.5% to 1% to even 1.12%. And some of them have recovered. For example, Tata Motors today when it opened, it dropped like a stone. It dropped all the way down to 961. Then right now as I'm talking to you, it's pulled back up to 977. So this is what's been happening. And the idea is when the Fed cuts interest rates, there's going to be more liquidity in the market. With more liquidity in the market and borrowing becoming cheaper in the US, it is expected that foreign investors who usually like to borrow and take an arbitrage in the stock markets, those funds are going to come flooding all over the world again. And if that is true, then we should see a kind of a further fueling of our current bull run, is what people are saying. And this explains why gold is also rallying. Not only gold is rallying, gold related stocks are also rallying, because usually what happens is as money becomes cheaper to borrow and there's more liquidity, more dollars entering the market, in turn, what happens to the price of gold is it starts creeping up. This is the usual phenomenon we have seen. But since we are in such uncharted territories as far as the Fed is concerned, where in the past, if you have seen historically, Fed cutting interest rate and raising interest rates were always related to something needing action in the market. For the first time, we are having a situation where the Fed really doesn't need to do it, and they're doing it for reasons which we usually do not see from them. So to give context to this is very difficult because we have not seen a situation like this. So these are some interesting times what we're going to be seeing played out in the Fed, in the American economy as far as their debt is concerned. Then of course the American election cycle. Like they're saying, very famously, Hillary Clinton won the popular vote but lost the electoral college votes. Al Gore is another example. And they feel maybe Kamala Harris, though may have the popular vote, that she will end up losing the electoral college votes because their system is very different from the ones which we have in India, where it's just not that you need to win majority votes. They have something known as an electoral college, and it's something very interesting. If you do not know how the American democracy works, the election works, I suggest you read about it. It's rather interesting. So we are in this very weird stage going for the next 40 odd days into the American election cycle. So there's a lot of things playing out globally and the things playing out locally, and market seems to be ignoring a lot of it and seems to be running on its own. So that's why it's very hard to look at these macroeconomic numbers or look at anything which the Fed is doing and say we're going to have this kind of a movement, because things are not going as predictable or symmetrical as we expect it to. So what do you do with all this information as an investor? Well, what I would suggest that you do, which has been what I've been talking about on my Instagram channel and in my other platforms, is look for pockets of value and keep investing in those pockets of value in small amounts, and not to take huge exposures where if you see the large price movement that it gives you sleepless nights. Take kind of exposure where the risk is to the point where you can put up with it. That would be my advice. Find those pockets of valuations and keep investing. And there are, believe it or not, there are still quite a few good companies at fairly reasonable prices. And if you're looking outside India, there's lots of big companies which are available at fairly great valuations if you take the time to really look at it. Anand has spoken about it in the last video when you were sitting here with me about Honda and why he argued the case why you should take this into consideration. Like Honda, there are many companies in the US, American companies, and there are many Japanese companies which have great valuations right now for you to take into consideration. But do keep in mind, just because they are in valuations doesn't mean it will immediately, market will pick up on that and take it soaring high. It's not true. It doesn't happen. And it may not happen at the pace which you want and in the time frames which you want. But it does happen. That I can tell you. A good company with good value tends to grow over a period of time. How fast it will grow and how soon will it grow is impossible to predict. And if you have those kind of goals which are time bound and you need a certain amount of return for a certain amount of time, then I suggest you do not look at the stock market or the shares particularly, that you find other avenues to invest in and not look at picking stocks. Stocks are great at picking if you are willing to wait patiently for long periods of time, especially if you need to buy at a lower value and wait for the market to realize what it's doing wrong and come around to it and start picking it up. So that being said, do keep an eye on the Fed news and see what's happening with the interest rate. Do see what is happening in the market, reacting to this, and see the gold price. And I would love to hear your feedback and your comments on this. I'll try and get Anand to come in another video and talk more about his views on Fed interest rates and gold prices and have a conversation. Hopefully, I'll have Shashwat also remotely recording with me and we'll have a discussion about this more. Thanks for watching the video, guys, and do put your comments and feedbacks down, and I will definitely look into those comments and feedback and try to incorporate them and answer your questions. That being said, do like and share this video. Do share it with friends and family who might find this content interesting and informative. And I'll see you in the next one tomorrow. Bye.
Hey guys, welcome back to Be Rich. Before we get into the video, I wanted to bring to your notice that my uncles Vinod Srinivasan, Anand Srinivasan and I have rolled out our Substack, which is basically a blog/newsletter where we're going to post our original research onto it. And we've analyzed macroeconomic trends, and a lot of you know my uncle Anand Srinivasan and I regularly write for The Hindu, and these articles are also going to be made available for you in the Substack. The link is moatinvesting.substack.com. You'll find it in the description and in the video right now. We hope you go check it out. We've put a lot of time and effort into it, and please give us comments and feedback on what you read. Thank you.
It's a great privilege and honor that so many of you in thousands have subscribed to my channel and have supported me. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.